So let's start and do some money management. So I am looking at the crude oil chart. Now why crude oil? Because money management, you always have to take in calculation the spread the different brokers offer, which means I can't show you exactly how to trade on this screen, so we just assume that since I know a lot of brokers have a spread when it comes to crude oil, about 10 cents. Sometimes it's a little bit more, sometimes it's a little bit less, but the average is 10 cents. So the calculation is much simpler. This is why I use it. Also, the market is very volatile and it goes up and down, left and right. So you can always find interesting things. So now let's assume we start with a budget of 1000, because I assume most people who start trading should be capable of somehow getting $1,000. You can save it up somehow. You should be able. Otherwise, starting under 1000 is not impossible, but it is much, well, I don't know, much more boring and it takes much longer to get some money. So, if we say we risk 1%, now what does this make us risk every trade? Well, simple. $10, euros, whatever per trade. Now, to make the calculations even easier, let's say we go for a risk to reward ratio 1:2. So simple math. Now let's just go somewhere to whatever, and let's assume we look at the chart and okay, let's say we are here and we retested, we're getting closer to this previous highs, and now we wanna, let's just say to make it simple, we wanna short here somewhere. Oops, wrong. But let's just say we are here. So we want to take a short position and sell the market, because this was the first option that I found. So this has nothing to do with trading now, it's more about money management, so don't worry too much about it. So let's say, what did we say? 1, 2, 2. Well, okay, 2. Okay, let's make it 2.02. Since it seems that I can get so I mean, this is a daily chart, so you would probably have to wait a couple of days until you can take profit, but you can use the same strategy on small time frames. This is just now to simply understand the calculations behind it. So like we said, we had a budget of 1000 and we are risking 10, which means we enter, let's say, at 99.50, let's make it 0.50. Stop loss at around, let's say, 102.50 to make the calculation even more easier. which would be a difference of let's make it US dollars again. Now those $3 in your portfolio or in your trade can't exceed the amount of $10, which means those $3 equal your $10. Just simple as that. So if you take a risk-reward ratio of 1 to 2, your profit will be 20. Profit will be 20. It will likely be $6 if we don't consider leverage and all those different kind of things that brokers offer, which means would be 6 to 20. Now let's assume we lose the first trade, or actually we can make a check and see what happens. Well, exactly, we actually lost the trade. We slightly broke above the stop loss. Now we had 1000 minus 1% equals, well, let's make it like this, 10 US dollars. So now we are left with 990. Now we take the next trade. Let's wait. Well, now okay, let's say we showed it here again with kind of the similar. Damn it. What was the risk-reward ratio? Well, this could have been a nice trade, but it doesn't matter at this point. Okay, let's say we showed it somewhere around here. Let's make it 2.0 risk-reward ratio. And we ended up winning this trade here, which means if we had 919, and we risk 1%, 1% of 990 is 9.90. And we won twice as much, which means we won 19.80. So we can add that to 990, and we have a total win of 1009.80. So we had a trade. The first one we lost, the second one we won, which is basically, if you think about it, you always have a 50-50 chance. Either you win or you lose, which means, depends, do you buy the stock or short it, but the stock goes either up or down, so it's always a 50-50 chance. And now this examples that I did proved exactly that. We won a trade and we lost one, but even though we won one and we lost one, we started with 1000 and now we gained at the second one and we have more than 1000. We have almost $1010 with just 2 trades. Now if you multiply all those times, let's say we have 100 trades, and we have 50 losses and 50 wins, well, guess what? If we multiply 990, well, if you have minus 50, this would be your losses. Minus 50. Minus 500 actually. So it would be roughly at 509.8. And if we had 50 wins with 20 euros, so 20 times 50 equals 1000. So if we add it up, we would still have a win and we would be at 1500. So those are the most simple trades and money management methods with a small risk reward ratio of 1.2. Now the important thing here is that we only risk 1%, because now we can change it up. Instead of 1%, let's say we take a risk of let's make the same with 3%. Now 3%, our first trade was a loss, which means minus 30, so we would have 970. Now 970 is our budget, and we now the second one was a win. 970, 3% of 970, well, that's something. Let's So at our second trade we could only risk 29.1, which means our profit would be times 2, which means 58 times 2. So added up, 9070 plus 58 would be 1028.2. Now the risk reward ratio is a little bit different. We had 2 trades, but we lost 30. If we take the 1000 as a start at both times, we lost 30, and we only gained 28 with 2 trades. I mean, we're still profitable, but if we had lost the second trade as well, we would have been down to 1940. So now the win and the losses are not quite the same. I mean, of course it depends. Is the first trade a loss or a win? But the difference is slightly bigger than what it was when we traded with a risk of 1%. Now we can do the same with 5%. So the first one would be a loss, we would have 950, and let's just check it. And now with a risk of 5%, we would only be capable of risking 47.5 the second time, because we lost the first one and we lost 50. Now we only have 47 times 0.5. So if we multiply that times 2, we would have 95, which means 9050 plus 95 equals 1045. Now again, chances are always 50-50. We had one win, one loss. Now the risk was 5%, we lost 50 and we won 45. So you can see the more you risk, the bigger your losses and the smaller your wins. If the trades are 50-50 chance, the risk reward is always 1 to 2. Which means if you have 10 losses in a row, well, you would be from 1000 to 500. So guess how much you will take to get back to 1000 and here and beyond. Now we can do the same with 10%. So the first loss would be 900. And now we would only have, the first time was a loss of 100 and now we have only 90 to risk. So times 2, we would end up with a win, if the second trade was a win, with 1080, although we lost 100. Depends how you calculate. If we start at 1000 again, we lost 100 only to make 80. So now the differences get bigger and bigger. Now let's say we do the same with 20. So our first loss would be 200, which means we would be down at 800. And now we would only have 80 to risk, which means 160 to risk, which means times 2 is 320. So we would now be 300. So now we start with 1000 and we risk 200 to make 120 if the first one is a loss and a win. So you have to understand that the smaller the risk, the easier it is to get back from losses to wins and to make money. But anyways, that's something you have to decide for yourself. But this was kind of the most simple rule, as well as a very easy kind of trade with a 50-50% chance and with a risk reward of 1 to 2. So see you next time.